Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 22nd, 2016. I'm Frank Ochoa with the current analysis for the session here, taking a look at the ES. What you see is basically price holding on these highs right at the weekly pivot range. Again, I've talked about it week over week over the last several weeks. Ever since this relationship was violated here and we formed a higher value relationship, I mentioned that the current short-term downtrend is over. We should be looking to buy pullbacks at the pivot range week over week for a continuation higher. And of course, we have our ultimate goal of reaching 2061s and even perhaps 2077 half ahead. You can see that by the end of the month right here, this is the one we've been talking about to begin the month. If this was the March low, which happened on the first trading day of the month, then we should be looking at this target here, which is 2025, and the second target at 2062. We're almost there. So right now, the early idea obviously is for bulls to continue to defend pullbacks into the pivot range for a continuation higher. Any failure to close above 2025s could signal a continuation or a return back to 2000s, and that's going to be an important pivot as well for bulls to defend from above. So right now, continued overall strength until proven otherwise. If we take a look at the intraday time frame, things are getting a little hairy in the intraday time frame. You can see the key level the key range that we have mapped out, 2031 quarter to 2044 half, the midpoint at 2037.75. That's the previous session's overnight range. You can see that prices tried above that level a couple of times, above the high, and both times rotated lower. Prices tried below the previous key range low and bounced back up to value. So basically, we're seeing a lot of back and forth in here, and that's what we expected. Was that price would likely trade and chop around the zone, but eventually we're going to see significant breakout potential here. Either above 2045s, beyond 2045 opens up a move into 2057, and that could happen today given the current low. An extended target, 125% expanded target can get us there, but obviously the primary target would be 2046, 2052, but we'll see how this thing plays out. Any failure to hold above 2027s opens up a continuation into 2018 with a shot at seeing a return back toward 2001s. So big time breakout potential, but we could see further trading range activity until directional conviction is seen. All right, let's take a look at crude oil here in the daily time frame. You can see here price continues to trend higher. We see that price is closing right around that 41.35, 41.36 key level. That's very important there. That's the top of the key range. Obviously, we pulled back into this LVN here, which is 37.65, and that sparked a nice continuation move to new highs into 42.50, which is that key level from the bottom of that previous impulse range. So if you come back a little bit here, you can see there's the impulse range low, the impulse range high. We're back to the bottom of that range after dropping to lows and failing to see new lows below the January lows. So right there, this is very important right here. We got 42.50 on the top side. Obviously, 41.35 is the key level here. And then we have composite VPOC at 40.08. So it's not out of the realm of possibility that we could just see a trading range develop here as price kind of looks to find additional upside momentum through 42.50 or either fails through 40.08s. Again, what I mentioned yesterday, if price goes offered at 40.08, that would imply a rejection of that current price as value, and that would imply a continuation back to the previous HBN below, which is 34.08. So there's some big time implications here if this price can't hold. So that's something I'll be looking for as we head into the rest of the week. Now looking at the intraday time frame, here's the 41.35 key level. You can see price holding around it. The previous session's high, that's the RTH high at 41.79. That was offered, and price is now below it. So this 41.80, 41.79, very important. You can see the higher lows coming in. Typically speaking, when you have an ascending wedge like this, it breaks to the upside. So watch 41.80 very closely, because acceptance above that level opens up a push back into 42.50. Failure to hold above 41.80 would suggest a return back toward 40.79, and a failure to hold 40.79 opens up 40.08. All right, let's take a look at gold futures here. Gold, we talked about before, has failed to see any acceptance above 1272s, this level right here. The failure to see that acceptance implied that we could see pullbacks and perhaps trading range action between 1227.70 and 1272.40. This is the range we're now watching, and we could see further development within that range. Any failed acceptance above 1272s puts pressure on the midpoint of this range. Failure to hold the midpoint opens up a rotation into the bottom of the range. Until we see expansion from this range, this key range here, we're likely going to see further trading range activity. So that could definitely be the case. Right now, since we're holding below 1263.90s, the implication is for a retest at 1233.30 and 1227.70. Looking at the NQ now, you can see NQ is holding above the 43.55 key level. That was an important key level that we had been watching from before. You can see price drop through that level, made it resistance and dropped to lows. We since pushed back to it, held it as resistance, then kind of melted through it. So 43.55 is going to be very important. I would say even any push down into it, breaking these recent lows, could still offer an opportunity for bulls to defend and squeeze for another push higher. We talked about before how narrow the current range is in the NQ. That multi-day narrow range could spark the next major directional breakout move. I talked about above 44.15s or 44.20s sparks a move into 45.23. That could be the next course of action. Again, any failure to hold 43.55 opens up a rotation back downward. So this is going to be the important pivot here. Bulls want to either squeeze through recent highs or defend a pullback to 43.55. Bears want to watch to see if there's any failed acceptance above, which would imply a return to 4,300. So if we're looking at the NQ on a lower time frame, this just looks like a bunch of mess right now. It really does. Very difficult to trade, a lot of chop. The best thing is always to kind of sit on the sideline and just let this thing play out. Because this is, if you're not used to trading range markets or you know, fading new highs back to the mean, fading new lows back to the mean, if you're not used to those types of concepts, it's best that you just kind of hold off, let this expansion shake out from this range, and then look to buy pullbacks in the direction of the rally or sell rips in the direction of the trend. So right now, a lot of trading range chop. I would say above that 44.20 opens up a move into 44.39 and 44.65. Right now, we're seeing a failure to hold above 44.12s, the top of the range here. That failure and then a drop and perhaps lower high opens up a likely move across the range into 43.59. So this is going to be an important area to watch here as we head into RTH trading for Tuesday. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.